Hello, investors. This is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Friday, February 28th, 4:36 p.m. Eastern Time, coming to you with tonight's Revere Roundup Daily Market Insight video. Market state still in a mild correction. And if you look at the trend gauge over here, that gives a good picture of that. Leader is still with the red arrow. Although day one bounce attempt today, we are still trading below the 21 EMA, still trading below the 50-day simple moving average, and then long term we remain above the 200-day moving average, although the Russell 2000 is trading below. What happened today? Day one bounce attempt with the super strong close. Partly due to some of the meg caps, you had some of the end of month flows that you sometimes see a bit of a squeeze on the last trading day of the month, but really strong close and some pretty good numbers here. 21 over 21 list is still under construction. Big 8 closed the day up 2.07%. RG8 closed up 1.20%. 60/40 stock and bond up 0.74%, and then GROTECTION up 0.59%. Let's take a look at the inter-asset correlation. And we'll start with the chart of the S&P 500 as usual. Yeah, really strong close here. Just slightly getting right to that 100-day moving average, which is a great sign. So the 50-day and the 21 there and that 6,000 level. But, bulls stepped up where they needed to today. And you can see, there's decent amount of support down here. So really good. Now the question is next week is what happens when price starts to get back into this range and whatnot. And I'll bring up a intraday chart you can see. And we were trading in this like 60 point tight range all day. And then into the end of the day, really ramped and closed extremely strong. Weekly, just closing slightly below the 20 week. It was looking a lot worse until the end of the day. So that's not too bad. Back here in January, we also had a close call at the 20 week. And besides these 2 weeks, since the 2023 low, have not really closed below the 20 week. So that's a big level. That's been a support this whole market. But zooming out, looking at the weekly chart doesn't look as bad as you would think. So definitely on watch for next week is to get a close back above that 20-week moving average along with that 6,000 psychological level. But all in all, given what happened, this chart does not look too bad. RSP, nice bullish engulfing today. Got the power. All the moving averages are pretty coiled here. And obviously, kind of forming a cup and handle base there. The Qs, again, strong close today, closing back above this 500. Held the 200-day, still got this 150 21-day up there, but again, kind of similar to S&P, a lot of support down here, 500 psychological level. So we'll see what happens if price rallies back up into this area next week. Mag 7, very similar to the Nasdaq as well, holding this prior base breakout level and a strong close today. Dow Jones putting up a nice close as well, just kind of rallied up into the end of the day with the other indexes and reclaiming the 50 days. So this one's showing a little bit of relative strength. Mid caps closed slightly below the 200-day moving average. Russell 2000 still living below the 200-day, getting above that, and this 2200 level would be a good start. Just still relative weakness in small caps. ARC, another one at the low end of the range, trying to hold. FFTY holding at the 200-day and saw some bounces in leaders again today. The VIX back below 20, and given the pullback in the indexes, this really never accelerated the upside. You really thought there was real fear in the market. This would have hit, 25, 30. The highest it got to is around that 22, 23 area. So we'll see if that's going to be the floor heading into next week. The dollar bouncing back up off this 100-day, coming in the 50. Gold pulling back a little bit, but still looks very orderly. Gold stock, same thing, kind of cup and handle here. Bitcoin rallying today, held this gap low, pretty logical spot to bounce. So we'll see what happens when it starts to explore comes back up into the range. Bonds continuing with the relative strength, TLT trying to get back above the 200 day, and that coincides with the rates moving lower, as you can see. Alrighty, that's the inter-asset correlation. Let's take a look at the tail of the tape. Um, so let's see, percent of stocks above 5 day, that's getting a little bit oversold, worth mentioning. And obviously this fear and greed and extreme fear, AAII down substantially, although the NAM is still elevated. This morning we had PCE data, pretty much came in line, was a pretty muted reaction off it. In today's keys, kind of still got the red arrow, want more confirmation, but the S&P just closing right there at the 100 day. Q's below, Russell still below the 200 day. So going into next week, we're going to be watching those same things as well. And then new leaders, new leadership. We're calling this day one rally attempt. So can today's lows hold as well? That would be pretty critical. Day count from down 5 to up 1, still 6 days below the 8 and the 21. Like I mentioned, the action today just range bound all day until that strong end of day rally, end of month flows. Maybe a lot of people covering shorts into the weekend. Mega cap started to move higher into the close as well. Sectors wise, Bitcoin bouncing today, financials, energy, aerospace and defense, biotech, utilities, semiconductors. On the weak side, China, China's been showing relative strength. It's funny how that works. Day the market starts to bounce a little bit, that one actually goes down. But obviously, emerging markets a little bit tougher to trade. Natural gas, uranium, gold, home builders as well. In-house or GROTECTION, no trades today, 0.41 RVAB, balance at risk 2.4%. Basically, the bottom line today is day one rally attempt with buyers in the close. So that is the tail of the tape. Let's take a look at some charts of interest. Take a look at 21/21 list here. Hims, this one's right, fantastic bounce here off the 50 day. This one's definitely, although it did kind of blow off here, this one's bouncing back stronger than most. Bros, this one, perfect bounce off the 21, didn't pull back as hard as other areas of the market and moving nicely. CYBR holding on to the 50 day. Spotify, another one that's showed relative strength, closing back above that 600 spot. Costco, another one just extremely strong, closing up 2.5% on the day. Uber, this is another one to watch. Obviously, big laggard here. And then this year, this one's been showing great relative strength here. Now this is forming a kind of a cup and handle base here. Good story here as well. Howmet, good action here, bounced off the 21. And that's especially when the market pulls back hard. You want to see the stocks that pulled back orderly, less off the highs, less volume, and spring back to the highs quicker than the market. And that's really the name of the game. And that's relative strength for you. And those tend to do the best when the market actually turns around. MP, this one's flagging at the highs quite nicely here. WGS, another relative strength one, found support at this prior base and the pullback around and back up through 100. Eli Lilly, another one, lagged towards the end of 2024. And now this year, this one's showing relative strength. And especially with some of these healthcare names that have been perking up as well. This one's doing quite well. AEM, undercut and reclaim of the 21. App loving, just sitting at the 100 day, and not saying this one can't rally back up, but this would be an example of just, this is if you look at Howmet versus this, this isn't an orderly pullback. This is 30% off the highs on huge volume on multiple gap downs. So this one definitely needs more time. It's good that it's holding this spot, but there's a difference between a pullback and a kind of a correction, to say the least. Docs, another one. This is what I would classify as a nice constructive pullback, forming a nice flag here, undercut and reclaim of the 21. DoorDash, again, very orderly constructive pullback, sitting at the 21. Starbucks continues to trend higher. This stock showing huge relative strength. And with the new CEO, they had good earnings falling through, trending extremely nicely. VRTX, big range, big base here, but setting up pretty nicely. Race obviously got crushed on that offering back into the 100-day. Cart got crushed on earnings as well. C Limited, very orderly pullback to the top of the base. One's looking good. Palantir, um, pretty harsh pullback, but we'll see if this can start to round back up through this 84 spot. Be pretty good. And then Futu, another China one, but decent undercut and reclaim of the 21 today. So not too bad action there. Some other charts did see LNG. This one looks really good. This one's coming out, breaking this down trend line back above all the moving averages. And definitely a non-growth sector either. So that's good to see. And then, we can look at some of these other defensive names. Philip Morris continues to make just continues to trend to the upside. Some other healthcare names. J&J looks really good. Let's take a look at ABBV. This one's trying to break out of this base. Really good action there. So yeah, definitely. And we can take a look at XLP too. This is another sector that, if rotation out of growth, this should continue to perform. And there's another one, KIE. This is insurance. This is breaking out of a nice looking flat base here as well. So, look at the chart in the S&P 500 going into next week. Today's lows, I think, are going to be very important. Still could see some frustration. Obviously, you can almost always find stocks that are holding up, but the market tends to do the best when you have those like growth theme leaders doing well. And some held up well, some have some work to do. But really the bottom line sentiment got started to get pretty bearish. We saw those AAII readings, so that could be another contrarian take for the bulls. You have today's low as a line in the sand to trade against, and then that seasonality that I mentioned on Wednesday's video, I believe, into early mid-March tends to be when seasonality bottoms out and market tends to have a nice rally in the following months. So we'll see if that plays out. This is the seasonality in February was the correlation was super spot on. So we'll see if that trend continues. We'll just round it out with a look at the weekly chart. And as long as we're holding above that 30-week moving average and the 40-week, the market's not going to get into serious trouble. But good close for the bulls today, and we'll have to see what the market has in store next week. Definitely no shortage of volatility right now. So that is going to wrap it. As always, like to hear from you. My email is connor@revereasset.com. And you can always reach out to Dan or Don at revereasset.com. Phone is 855-REAL-WEALTH, 855-732-5932. And if you're ever interested in becoming a client, as always, please reach out. That is everything I got for today. I hope you guys have a great weekend and see you guys next week.